the potential risks and rewards of all of my EV stocks. What is happening, investors? It is your boy Jack. I am not a financial advisor and I got the hoodie to prove that fact. And today we're going to be speaking about all of the EV stocks that I own. It goes without saying I'm a massive bull on EV. That's where a lot of my portfolio is right now. But it should also be well known that I am not a traditional investor. I will be the first one to tell you that, my investment style is by no means the safest. I chase growth. I am young and I have a massive risk tolerance. So in general, the companies that I am going to be willing to put the most money into will have massive upside potential. But with massive upside potential, in general is going to come massive downside potential.
Oh my god! Wow!
This is not always the case, of course, but more often than not, high risk equals high reward. So I am invested in 6 EV related companies, okay? And we're going to go through them very briefly today in order of, the one I have the most money in, all the way down to the least money in. So we're going to be speaking about Workhorse, Lordstown Motors, Tesla, Hyliion, Chargepoint, and NIO very briefly. And what I want to do is I want to highlight, the short, medium, or long-term risks associated with each one of these companies. I want to let you guys know when I initially bought each of these companies, just because it's different buying some of these now than it was when I initially bought. A lot of things have changed. And ultimately, I just want to give you both sides of the story. Because obviously, when I make a video on a company, in general, I'm highlighting the positives about them. Now, I do try and include the negatives, but, in general, my videos have a positive tone to them. So this is just going to be a really quick recap of what can go wrong with any of the EV stocks I personally am invested in. So right before we get into the video, guys, could I please ask you to hit that juicy like button, my friends? I really would appreciate it. It really helps me out. If you're new around here, what are you waiting for, my friend? Hit that juicy red subscribe button and join the family. We're on the road to 50,000 juicy subscribers. And please drop me a comment down below, let me know what you think about any of the companies that we cover in today's video and what your thoughts are on them. With all that being said, guys, into the video. So Workhorse, the first thing I want to say is I initially bought these guys in the 14. So from where I initially bought, they are now pretty much twice as expensive. So that is something to keep in mind from the start. Because a lot of the time with the companies I speak about, I buy them early on, and we keep speaking about them, but some people may not have seen the first videos. Some people may see me speaking about Workhorse for the first time today and see how bullish I am on them and see they're at $28 a share, and they won't have the knowledge that, I bought in for the first time at $14 a share. So obviously you're paying literally twice as much as you would have when I got in, and a lot of people got in. Now with that being said, I have bought the whole way up. I bought 15, 16, 17, 18. Last week I bought in 24s. So it goes without saying I have a lot of confidence in this company. It is the biggest position in my portfolio by an absolute mile. So I have 300 shares in this company as of right now. I'm up a decent amount, and as I said, my initial cost basis was around $14. So I got into them. They're up 100% already if I hadn't have bought any more, but I have bought a whole lot more. I think everybody knows what the short-term risk is with Workhorse. A lot of the USPS contract is priced in without a doubt in my mind, and I have said this numerous times on the channel at this stage. If we don't get the USPS contract or any portion of it, which I will make very clear, I think is a very low possibility of happening. But if it does happen on some off chance, Workhorse is going to crash quite considerably. To what price? I can speculate, you can speculate, who knows? I don't think they would be willing to drop below any longer $13, $14 maybe. With that being said, there always is the potential. I mean, all you have to do is zoom out to the 6-month chart, guys. 6 months ago, they were a $1 stock. Anything could happen. Maybe I am being too optimistic. Maybe they could drop to the $5, $6, $7, $8 mark. But that is the short-term risk with Workhorse. And that's what I said at the start of this video. I'm not a normal investor, people. And I genuinely just love chasing high risk, high reward. Like yesterday, my portfolio went up 10% in a day. That is not something you generally see, but that is because I am so willing to go on these high risk, high reward companies. Just like last week, I had negative 6, 7% days. Again, that's not something you see often. That's the short-term risk with Workhorse. What's the long-term risk? Well, you see, I'm very bullish on them, and I don't think there are the most long-term risks in the world. Obviously, there's the obvious ones, lots of competition, or there could be more competition down the line. They're going to need to be able to, be cost effective. If they want to keep growing at a very nice rate, we're going to need more big contracts than just the USPS contract. And then the question comes down to how long will it take to have the capital to hire that many more employees? Will you have to, go somewhere like Lordstown Motors to do some production, or will that even be an option down the line? Will you have to buy a new factory or build a new factory? There's some of the long term, I wouldn't even say risks, but just concerns. As of right now, I don't have many medium to long term concerns for Workhorse. The main one one is obviously the USPS contract. Goes without saying, I still love these guys. I think the fact that I was willing to buy them in the 24s and I initially bought in the 14s speaks for itself. But yeah, this is as high risk, high reward as it gets if you are buying at these prices, people. I mean, you are betting on the USPS contract at these prices. It really is that simple. And I think that's what attracted me to them so much, you know. I love the high reward, high risk. That genuinely is something that I love investing in. So here we are. That's why they've taken so much of my money. Okay, second company of today. So my second biggest EV position, Lordstown Motors, baby. I mean, what a beautiful company. I wanted to invest in these guys before I found out they were going to go public. Obviously, I found out about them through Workhorse, and they very quickly became an amazing looking company in my eyes. And again, this is a company I initially bought at $11.80 a share. And you may remember, we were up all the way to $31.40. So I was up, you know, close to 200% in this company if I had have just kept my initial cost basis. But again, since then I've bought loads more. And again, I actually bought at $24 a share. So that just goes to show, I still think they're great value. I made a video calling them the most undervalued EV stock when they were at $17 a share. Or maybe it was $14 a share. But either way, they were a lot cheaper than they are now. So what's the short-term risks? Well, I mean, the first one, obviously, you can see here, it's not Lordstown Motor, it's Diamond Peak Holdings Corp. So it's going to be doing a reverse merger with a SPAC. So things could go wrong, it could get prolonged, it could get pushed back, blah, 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 which could mean that, you know, production will go slower, etc. I don't worry about that at all. I definitely think the merger's going through. So there's two worries, in my opinion. The biggest one is, can we be first to market? Because that is what a lot of us are betting on right now. We're betting that Lordstown Motors is going to be the first electric full-size pickup truck to market. They're going to beat Tesla, they're going to beat Rivian, they're going to beat everybody to market, and that will give them such a big advantage going forward. So what if they can't do that? Obviously that's a risk, and obviously that will reflect in the share price if they can't bring that to fruition under the timelines they've set out by the second half of next year. And now I definitely do think they will. They have the third biggest auto factory over in the US. They have all of the juicy robots. They have immense production capacity. They have a great management team. They're going to be in a very good cash position once the merger goes through. It's all set up for success, you know what I mean? That's how I'll say that. I've said this loads of times. I don't think Lordstown Motors is high risk by any means whatsoever. I really don't. If I did, I probably wouldn't have bought more at $24 a share. I definitely wouldn't call it as risky as Workhorse. There's not necessarily one catalyst we're waiting for from Lordstown in the next couple of weeks or even the next month or two. Obviously the merger will be one, but that could be any time in the last quarter of this year. It's speculated to be October. We have 40,000 juicy pre-orders, which is up from 27,000 only about 6 weeks ago, and at this stage it's probably more than 40,000. We were in front of the White House yesterday. I love them. So as far as EV stocks go, I know it might sound bold to some people. I don't think this is a very risky one in general, even at current prices if you're a long-term investor. And by the way, Workhorse and Lordstown are my two biggest by far. And when I say that, I mean by far. Okay, on to my third biggest EV position. We have Tesla. Okay, so I assume everybody who's watching this is going to have a decent understanding of Tesla. Okay, and all you really have to do is click on the year chart and just look at how absolutely incredible it has been for this company. Now that has come with its ups and downs, absolutely massively. You'll all remember this, the run up to the stock split, and then boom, massive crash. We lost a third of our value. Then we went on a juicy little run up again, then we crashed back down, and now we're sitting at about $421.20 a share. So I mean, what really are the risks with Tesla? Well, the first one being the valuation is absolutely insane, and I think any Tesla investor will agree with me there. But it deserves to be insane because the prospects are so insane, and they have proven themselves time and time again to be worth it. I mean, I think a lot of people agree that Elon Musk is a genius of a man. Tesla is so far ahead of the competition, it would be borderline impossible for anybody to catch up and do what they've done, no matter how much money you have. Very short-term risks. I mean, I think it would be really damaging for the company if they posted a quarterly loss anytime soon after doing the 4 profitable ones in a row. I don't think that's going to happen though. And then just in general, over the short, medium and long term, if they don't do all of the things they've said they'll do, it's definitely going to be bad for the stock. We pay massive premiums for Tesla because we believe they're going to do massive, quite literally life-changing things, not just with cars but with everything else they're involved in. The thing about Tesla is I think if you're willing to hold them for 5+ years, it's not high risk at all. But in the short term, it's one of the most volatile, high risk stocks out there. I mean, if you're a day trader, it's probably pretty tough. You know what I mean? It could go either way a lot of the time. I said it before, I will buy between 300 and 350 depending on what the market is doing. And I would really heavily buy if we ever hit the mid 200s. Now I don't know if we ever will hit them, to be honest, but that is where I would really heavily buy until fundamentals change yet again, and then I might be willing to pay a little bit more. But I mean, as Tesla guys, you all know the score here. Okay, next up we have Hyliion. Now I think everybody everybody knows what is going on with Hyliion right now. Nice day yesterday, up 8.35%, but I mean, Workhorse and Lordstown Motors both did better, and we found out that Hyliion will be merging with Tortoise Acquisition Corp definitively, so yeah, a little bit of a weird day all in all. And I mean, it's been a weird month or so. So we were up above $55 at one stage. We dipped down quite poorly, not horrifically, but quite poorly, but that was part of a broader market sell-off. As of right now, we're about 14% away from all-time highs, and we are up 5% in the pre-market. So I mean, what are my concerns with this company? What do I think the biggest risks are in the short term? I honestly don't think there really is many. I do think we need to see more contracts, but once they are a public company, we'll know a lot more of what's going on behind the scenes. Also, I think they are quite expensive. I know I get hate for this. I am still holding them. I'm not selling them. I do think they have room to go up considerably higher, but in regards to value, I think they're quite expensive. And you can definitely disagree, and again, I want to stress the fact that I don't think that means they're going to go down in value, because I really don't, or else I would have sold my shares. That's really my primary concern though, the contracts, you know, will we get enough customers? Because we know they work, we know we do have customers. Thomas Healy is an absolute legend. I mean, I love absolutely everything that he's done. I love the company, I love the prospects, we just need to see what happens. And as well, a lot of EV companies get attacked a lot by the press. Hyliion hasn't had many negative articles whatsoever, and I know it might sound weird me bringing that up, but I mean, if ever some bad news starts to come out, I'm going to be worried in regards to how Hyliion investors react, because there hasn't been much of it whatsoever. And we've seen what bad articles can do to EV countless times, through Tesla and Workhorse in particular, and even NIO a lot of the time. So that's where I kind of stand on them, you know. I'm not going to be buying more. These is a company I bought at $20.98 a share, so I'm up a considerable amount. You know, again, a company I was up, what, 175-ish% in at the absolute peaks. But yeah, it's definitely worth keeping a very close eye on these guys, and it's again the kind of company where I think if you're going to hold them for 5 years, you're more than likely going to make a whole lot of money. I just find it really difficult to project what I think is going to happen over the next 3 to 6 months. I'll put it that way. I feel like I can put decent estimates on certain companies, but Hyliion, I just find it really hard to place them. They are right around where I expected them to be post-merger. I mean, I've been saying it for a long time now. $50 to $70 were my estimates. We hit 55 before the merger even happened. We'll see what happens now by the end of the week when the ticker symbol actually changes. Yeah, that's Hyliion, you know. I don't think it's the riskiest by any means, but I also don't think it offers the best reward by any means. So if you want to be an EV and you're willing to pay a slightly higher premium and potentially have less risk, as opposed to say Workhorse, this is probably a good option. Okay, second up, we actually have a relatively new addition to my portfolio. Okay, it's a SPAC. We only found out about them Tuesday 15th of September. So since then we've gone up nearly 50% in value. Now I have to admit I was late to the party. I got in, I think it was just below $14 a share, $13.93 or something. I only picked up 100 shares. This is what I like to call, you know, my opening position, so I can add more and have a decent cost basis if some more positive news comes out, or else I can just hold it and, you know, play the ride, hopefully make some nice money. So we're at 15.53. We went up really nicely yesterday at 12%. Over the last 2 days, 25% essentially. We're pretty much at break even in the pre-market. This company does some really weird things in the pre-market, so I don't pay too much attention to it. Now, this is a SPAC, okay? So again, if you don't even know who they are, let me bring you over to Chargepoint. So this is Chargepoint, and I've made videos on them, but essentially they're in public chargers. Now, the thing is, for me, I'm not sure if this is going to be a really long-term hold for me, in all honesty, and I'll explain why. I think as EV gets more and more popular, more and more people are going to have chargers in their house. I really do think it's that simple. So a service like this, or even a service offered by Blink, parts of that may become somewhat redundant, or not even be able to offer a profit. Now when I say long-term in that regards, I'm speaking at least 5-10 years down the line. That's why I'm willing to invest in them, because I genuinely do think, even if this does end up being a shorter term play for me, even if it's less than 6 months, I think a lot of money could be made here, especially if we do get some good news, you know what I mean? It's definitive now at this stage. That's kind of the short-term risk, I suppose. Shorter term, you know, do a lot more of these companies begin to pop up. And shorter term, if people do start buying more and more EV vehicles, which is expected, do they just get chargers put in their house? This is the risk of, you know, investing in an emerging market as well, especially since this isn't actually an EV company as such, they're in the chargers. That's my primary concern with this company. And you know, that's one of the major things that made me never invest in Blink. There was obviously more reasons there as well. Chargepoint's a lot more expensive than Blink right off the bat, but they're also a much more established company. But I love everything Chargepoint stands for, you know what I mean? So at these prices, I would say the risk is honestly very, very low. Maybe we could dip to $12 or so. I really don't see that happening. But this is one of the SPACs that is out right now that I do think could be an easy 100%er in a very short period of time from where we are right now. if some hype starts to build behind it and if we get some good solid news. So I wouldn't say it's the riskiest, but I wouldn't say it's safe either. It just sits somewhere in the middle. And the final company we have today, another one that everybody is going to know. We're having a look at NIO, okay? The only Chinese company I'm actually invested in, and it is my smallest EV position. So I've spoken about this a few times before, and it's predominantly just I don't want too much money in China. With all of the tensions that are going on in the US, we have seen some companies provide false numbers from China before. Luckin Coffee, for example. Now, we can't hold that against every Chinese company. That would be absolutely ridiculous. But the other thing is, I mean, I've never been to China. I have no idea what the culture is like. I've no idea how big this company actually is. All I can go off is what I read online. Even though I'm not from the US, I think I have a better understanding of how the US works. I speak with dozens and dozens of people from the US every single day in my Discord. I've been there numerous times. I have a better understanding of how the US actually works than how China works, for example. And it's very hard for me to figure out how China works, because it's not like I can just pop over there and do a little bit of market research. And I've seen so many mixed reviews about NIO online. But the thing is, when I look at NIO just as a business, when I look at the things I can read on paper, I really do like the look of it. So I mean, that's kind of the risk for me. It's hard to have a really good understanding of this company, and that's why I'm not willing to put very much money into it. So you can kind of see a general theme, guys. Pretty much with all of these EV companies, there's many things that could go wrong, short, medium and long term. And then it goes for all of these companies. You know, there's a lot of projections out there for EV that show some really nice compound annual growth rates for sales, etc. It's just projections at this point, you know what I mean? It could go slower, it could go faster. And there's always going to be curveballs thrown into the mix. There's always going to be new companies coming in. There's probably going to be more publicly traded companies. There's going to be more private startups. There's going to be big names like Ford and stuff getting in. So yeah, there's a lot of concerns with EV. And don't get me wrong, I mean, I know that. I love high risk, high reward investing. It is who I am as a person. But anyway, my friend, that is it. So my friend, if you have watched until the end of the video, you are a true legend, and I really genuinely do appreciate the support you're giving me. It means the world to me. It would also mean a lot to me if you could drop this video a like if you did enjoy and it gave you some value and insight into, you know, what I think about all of these companies that I am really bullish on. And if you could drop me a comment and subscribe if you're new around here, that would help me out massively also. But I mean, EV is so exciting, but it is really important to understand there's massive risks associated with all of these companies. And so if you can't handle that, this isn't for you. I'm trying to make it clearer and clearer. I am not a normal investor, you know. I am not happy with seeing my portfolio go up 15-20% a year. But anyway, guys, thank you all so much for watching today's video. I hope you all have an absolutely fantastic day. I will see you for the next one. Peace.